Welcome back to Hedge Heads, brought to you by FM Bank. John, what are we talking about today?
We have some real important stuff to talk about. This is the time of year. We're getting close to harvest. And are you going to store it? Are you going to sell it? Are you going to re-own bushels? And most importantly, if you don't have room for your bushels, start planning much better than you've been planning in the past.
And how to work with your bank.
Yes.
Welcome to Hedge Heads, where hosts Jon and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
John, we got new mics, we got a new sponsor, we got a new grain market, right? Nothing changed.
We got new everything. Actually, the mics were well overdue. We had very good mics. As a matter of fact, they were too good. It picked up every single sound you could possibly make. You could hear a ant crawl on the mics that we used to have.
And now I don't need to worry about my stomach rumbling when I have these lunch.
Yeah, so new mics, new partnership. I mean, it's we're looking forward to it. We're going to be talking a lot about it in the days ahead. It fits right into the Hedge program. It's a perfect fit for a partnership. Everything you would be looking for. So it's exciting stuff.
I want to start there because I do think FM Bank is extremely important to me as a partner because of how important the bank is in your hedge program.
Yes.
So can you just talk a little bit about that banking side and why FM Bank is such a great partner?
Yeah, and this is not because they're the new sponsors, new partners that we will gush over it. This is definitely, they fit in well with what we do, and we worked with them for many years. And the major difference, and this is where it fits in, here's how the puzzle piece fits perfect with us, is these guys have a separating line, not in your operating note. This is a separate marketing line. So if you have an advisor, they meet with a banker, they, we cut and then meet with me. We have a three person meeting going. Yeah, easy for me to say. Yeah. I was trying to lead in anywhere but where that was headed.
Well,
but congratulations, you took it there. And then I'll be the advisor, in plenty of circumstances, and then I'm with the bank. So the difference is they have a credit line that is made for marketing. So you don't get pinched in your operating note. You don't run out of money. You don't, obviously you have to have conversations with the banker. It's not unlimited funds for everybody for anything. Like legitimate hedges, the idea that if it's losing money here, it's making money on the farm. And in the end, the bank's going to get their money. They understand all this. They work with guys that have, a good, solid plan. And then they simply back up that plan with the marketing loan. And that might not sound like a big deal, but I can tell you it is the major difference between guys being successful hedging and guys getting washed out of hedging, dipping their toe in, not enjoying the ride, getting a couple margin calls, and they're done forever, which happens to a lot of people. And it is the reason why guys quit hedging is because the money gets tight and there is no money to cover all these margin calls, so it's just easier to haul it into the elevator. It's just easier to haul it in to where they don't have margin calls. And we've talked about this in the past, the path of least resistance. You just like, well, if it's going to cost margin money, I might as well just keep it here. Or I might, just like Eeyore would talk, I might as well do that. It's going to be too. They take the guesswork out of that, where the money's going to come from, and it's a direct line.
Just 5 cents, though, John.
Yeah, it's only just 5 cents a month. So the idea is that you try to really streamline your farm and run it exactly like a business with very few limitations. Now, I'm not saying hedging's easy, and I don't think Ryan thinks that either.
No,
you have to start with a very good, solid plan before you have access to this marketing loan. They don't just, they don't loan money to people to buy orange juice futures when you're a soybean farmer. It isn't that kind of relationship at all, nor should it be. We're talking on the hedge side of stuff where you'd rather do it here on the board than do it at the elevator for whatever reason. It might be that you don't know what you're going to have for bushels, which is what's happening around here. They would like to forward contract, but they can't. So they're kind of just stuck with not being able to afford margins if there's margins, and then not knowing what you have for a crop. Anyways, these guys farm, they work with farmers, they hedge as well, and they really know what's going on. So that's why it's a great fit. And I will talk a lot more about the marketing side and the marketing line these guys offer. But that's a huge piece of the puzzle.
FM Bank is our sponsor. The banking side that we're talking about is not you must go with FM Bank. There's plenty of banks out there. Our point is work with your banker.
Yes.
Now, FM Bank might have some other products or other things, or bankers that farm and know farming.
Yeah.
But work with your banker is the real stress. It's not selling these services. It's telling you why working with your banker is so important.
Yeah, you might be in a completely different region, and then you might have these conversations with the bank. Hey, this bank does this, so-and-so. Is this something that we could look at doing as well? But you also, it's a fine line there. You do not want to get extra money loaned out to yourself, because it is a loan, even on the marketing side, if you're not going to get paid back. So you can't just take this money and speculate in the markets and then
I want to
lose
buy
money
50 oil futures, John.
Yeah, lose money on that and then expect that loan not to have to be repaid. It's the idea is if you're losing money here, you're gaining it on your crop. This is just generically, or if you're making money here, you're losing it on your crop in the field. Thus, the loan should be covered one way or the other. Of course, you have basis risk and other things that aren't perfect with the markets. But still, it opens a lot of doors, and really this is the beginning of the journey for guy hedging. Now, let's dive into what everybody wants to know. What should I do here? Where is this stuff going to go? Do I store it? Do I get rid of a lot of it at harvest? Do I want to re-own these bushels? Do I just say, goodbye bushels and sayonara? We're not interested in re-owning. Well, let's break all that down. I mean, I think that's what's on everybody's mind. At this time of year, it shifts definitely away from old crop, if you can even call it old crop anymore. I mean, there's definitely stuff kicking around, beans and corn, especially corn, but all the focus is on December 26, November 27 on back. So that's what we'll be talking about. We'll also be talking about November 27 beans and December 27 December 28 corn already. So we'll even jump out another year and start planning ahead. But let's dive right into it. I mean, we've seen a lot of different looks, to say the least, in the last number of weeks.
It's been a crazy couple weeks.
It is. Hot, dry, to more rain in the forecast. Iran war on, Iran war off, Russia, Ukraine. You have all this stuff going on affecting the grain prices. Now we've started to slide, which I would call this a very seasonal deal happening right now. What levels are we looking at? I saw 1120. I'm looking at your bean chart right there. 1120 on the beans. Like, if we're going to pick targets that we usually get to by mid-August, let's start going over those targets. 1120 makes a lot of sense in beans. That's where it took off from. Spent about a month going sideways there. And then if you look at that previous to that, it seemed to like that price for a long time. So that's a logical spot if we're going to continue to sell off where that could be headed. Corn, the last 2 years, September has been the leader to the downside. We've touched $3.95 for 2 years in a row. Very unlikely this year with September up in the 440s. That's a long
way down from corn now.
Yeah, and we don't have the same growing season that we've had for the last 2 years. We knew it was a monster by this time last year and the year before. That's why I'm a little more excited. We should have a lot more to do this year, a lot more to look at, because we don't know what's out there. Now, is it a record? I would say there's not a very good chance of that at all. Others would disagree. This is the season that you're going to see everybody's crop forecast.
Everyone's hitting the 190s finally, John.
Yeah. Well, some guys are putting that out there, and of course, they're getting the reaction that you would expect. You're getting angry people with the pro farmer crop tour. You're getting angry people with the high yield forecast. Now, this whole thing where people get angry at this stuff, this is all brand new stuff. It probably started 5-6 years ago, and it's definitely because of social media. Like, If you go online, you're going to probably get more confused than if you didn't read anything at all and went off your gut. Going online used to be somewhat beneficial, and now every time I go, and I think you've gone less and less on Twitter. Every week I talk to you, you seem to be less and less on it. it's gone from being somewhat of a decent resource for information to, if you read enough, you're going to be more confused than ever. It's starting to really hurt, and that's what you're seeing. You're going to see guys saying it's 177. You're going to see guys saying it's 192. It's actually really boring talk, but just know that this is not like the last 2 years. Nobody knows what the number is. It's very unlikely that we're going to shatter records like we have been doing. And it's more likely, in the high 170s, low 180s. And that's exactly the way the market's trading it right now. You might think, boy, this thing can't make up its mind. Maybe it's finding an equilibrium. Like, we don't need to be at 395 September. And when I say we went to 395 the last 2 years, in August, August has been the low for the last 2 years. It's spent very little time there. Most of the time is anywhere from 420 to 450, call it December corn. And we're not that far away from it right now. So to me, the price structure looks exactly what you would think it would look like in a year where it's not a record crop. There's no reason to drive it down to lows. But if they're going to do that, sell out of their long position and really drive to lows, you could see 420 December futures. Now, I don't think it's going there. I think that once we get past this August report, which is, I think, the 12th and 13th, that you'll find your low. That's what's happened the last 2 years. Everyone expects this one to be like this great saving report, like it's been hot and dry. So you would expect it to show up in this report. It doesn't work like that. For this August report tends to let people down. Now, if you do see a slightly bullish tilt to it, that's a really promising sign, because that's not what this report's known for. This report's known for just being a heartbreaker, or let's go out to the bar and get a drink after you see that. It's known just to ruin a person's day, because it looks like we're never going to dig out from these piles that they say we have here in August. So it's not a real fun report. I would expect a negative reaction. But here's the good news. Shortly after the report, you do find your bottom, and it tends to work its way out of there. So that's kind of where we're at in that. Now, what I'm concentrating really quick on is...
Before we get to what you're concentrating on, I just want to bring up wheat for just a minute.
Yeah, wheat.
I want to bring up wheat, and I want to bring up my camping trip, because once again, my camping trip remains undefeated.
For wheat harvest?
Wheat highs.
Wheat highs, okay.
Wheat highs. 724 was my final day of my camping trip. What did wheat hit that day? $7.25.
There's a pattern being established
July
here.
23rd.
Yeah.
The Thursday, second to the last day of my camping trip. What did wheat hit? $7.25.
Classic wheat.
I mean,
classic
wheat. Wait till I'm on vacation. Rocket to the highs. Undefeated.
Yeah.
My camping trip is undefeated. And so I will let you know when I'm going next year.
Yes.
But just a heads up, it's not a guarantee. Past result. What is the say? How do we say that?
Past results are indicative of future results. I believe something like that.
Yeah, whatever. We have to say compliance. We said it. It might, for sure, it won't happen next year. But I just had to point that out, that my camping trip is still undefeated.
It coincides with the wheat highs. It's not surprising that we're going to come off as we're harvesting Minneapolis wheat at all. The crop was a little bit better than they expected, but you're hearing things all over the board in Minneapolis. Then you had a shorter Kansas crop. So where do we sit in all this stuff, and what should we do? I'm looking at, this is the first year where I'm a little more aggressive. I think I'm going to be a little more aggressive than I've been. I want to re-own some of these bushels that we've sold on new crop. I'm going to be looking for ways to do that. Last year, we sold puts and bought calls, and that was in one of the more deferred months. So we had a full year, almost a full year there. It wasn't December, but it was a little shorter period of time. That, if you haven't figured it out by now, it was September. So anyway, selling puts, buying calls worked wonderfully last year. A little different this year because I was selling 415 puts for September, which would be September 27th. The problem is we're at 485, so we're a lot higher than we were last year. And the timing on it, obviously, you'd want to be doing that right. But I'm going to be looking at strategies very similar to that, and that's where the planning is right now. I feel like guys marketed what they were going to market during the summer. They're probably a lot of 40 to 60% marketed. That's very common for the corn crop and bean crop.
Especially the way the weather is.
Yeah, especially with the way the weather is. Maybe guys are a little bit. But this year, I believe is going to be a lot more forgiving for guys that maybe didn't get enough marketed. In other words, if you missed the first train, I think that you're going to see those highs again and beyond. And I put it on my last little blurb. I think I had 512 is a very realistic target for corn going into winter, springtime. Now, lots can change. Numbers can change. Attitudes can change. World events can change. These are just generic things that we're saying with what we know with the crop right now. Obviously, they could up the acre, 2 million acres in corn, and the target would be less. They could drop 7 bushels off the yield in corn, not raise acreage, and then the target's going to be higher. With the numbers that we know today, what we're looking for is how can I re-own some of these bushels? If you felt like you got the sales a little bit low, if you got 510, great, or 509, maybe just have that sale as final. But if you had some in the 460s, 470s, we might want to look to re-own some of these and maybe get a better price. So we'll be looking at ways to do that. And then should I market December 27 corn? That's a question that I'll get. I'm not a big fan of marketing the next year's crop until I see what's going to happen in the world. Like, we have too many world events to be getting stretched out too far with the way inputs, what they cost. Also, the price that you see like on December 27, where is it? I think it's right around, it's close to $5.
This episode of Hedge Heads is brought to you by FM Bank. FM Bank, built for agriculture, with 6 locations across southern and western Minnesota, serving producers throughout Minnesota and the eastern Dakotas. At FM Bank, you're not explaining farming to a banker, you're working with lenders who actually farm themselves and understand the decisions you face every day. FM Bank's segregated hedge and marketing line program gives producers dedicated financing to execute marketing plans, manage risk, and seize market opportunities without tying up operating capital. From field to finance, experience the advantage. Visit mybankfm.com to learn more. Member FDIC.
So I'm not saying don't take a price that's profitable. What I'm saying is
489.
Yeah, when it's in the 4s, you pretty much see that same price somewhere along the way again. Meaning you're going to get a lot more information and you're going to get the same price. Why take out the upside when you don't have any of the pieces of the puzzle yet?
So you're saying I shouldn't sell 10, right?
I'm not a big fan of it. Now, if we're at $6 coming down and we're inverted, and let's say we're at $5.50 for December 2027, that's a whole different argument. I am a big fan of going years out when we're much higher priced. When we're low priced, I just don't see the advantage. I don't know why guys do it. When we're high priced, it's a huge advantage, and that's why you hedge. Those are the guys that are getting $6. Yeah, those are the guys getting, like $6, 2 years in a row. That's how you do it. But when it's in the 4s, I'm not in a big rush because of all the unknowns. So we're going to be looking at ways to re-own these bushels. What is it going to do in the short term? Up, down? Well, I think you've seen exactly the way the market is.
I know.
Yesterday was up. Today's down.
Might go sideways. That's exactly what you can expect out of the price action. If I was a betting man, I would say we're going to drift lower into the report because we've had enough rain now where that's kind of alleviated the stress in a lot of areas. Now, that being said, we're in an area that definitely needs rain. We're hurting here. We got some more rain last night. Have you gotten into any fields? Just driving by, the corn looks outstanding. I have not gone into the fields. The ears are still small, so it's
gonna have gotten pushed here. It's probably I think, and these guys usually are on the low side. I think they're actually going to be on the high side this year, just because of how hot it was. It was like it had to be a record for July around here. Stuff got pushed really hard. The stuff that did have moisture looks tall, looks good, but it doesn't look like the last 2 years. The last 2 years, everything looked like a movie, like dark green to the edge of the road. You would be hard pressed to find a couple counties that were in trouble in the entire United States last year or the year before. Sure, they were out there, but they were few and far between. We're here, we're talking about multiple issues in multiple states. That, in my mind, is going to bring everything down. I think, if I had to toss a number out, 179 makes a lot of sense right now to me. Beans, always a wild card. We'll have to see how August is. You never do know with beans. but I'd be surprised if we're able to top 52 this year. You have to have pretty good weather for that. So we're looking for, like I say, strategies to re-own it. I feel like the marketing that should have happened already happened, and now is not the time to panic. You might be panicking if, like, I have all these bushels and I have no place to put it. This is exactly what I'm talking about by coming up with a plan way before you need it. You need to start figuring out what you want to do with those bushels. Are you going to sell it? Are you going to call a guy like us and see if you can re-own it for a reasonable price? You need to start planning. I am going to be recommending guys re-own bushels in a limited risk way. So, give me a call and I'll tell you exactly what our plan is. But this is what you're doing this time of year, in addition to all the million other things you have to do for farming, is what am I doing with the stuff I don't have storage for? Because the reason why I'm saying you have to do it soon is because normally this is where you would expect the low. So if you're going to want to re-own it, you're going to want to have that plan in place well before you're harvesting. A lot of people make the mistake of, when they're harvesting, trying to figure out what they're going to do with all these bushels. And honestly, we're usually well off the lows once that's happening. It makes it much harder or much more risky. So that's kind of where I'm at on all this stuff. Plenty of news, hard to cover it all. It changes daily. I guess the Iran war is over again and they're happy to sign a deal. By the next podcast, I'm sure we're going to be talking about something completely different than that.
That's crazy that didn't happen on a Friday.
It happens every weekend.
It might be real this time.
You might. it might be. I think most people are wore out by this and are barely paying attention. They're trying not to pay attention, but it is what it is, and it does affect the markets. I think there's a lot going on. Like I say, I'm in the camp. I want to re-own these bushels. That's really what I'm concentrating on. And when I say I want to re-own these bushels, I'm not hanging up the phone and going and buying corn and bean future contracts.
I was just going to ask that.
Yeah, that is not what's happening here. It's definitely, I'm more in the camp where I'd like to get a zone bot at least. Like, let's just say you sell a put. Like, if it gets down there and gets in the money that you'd be long futures from that point. But still, it's better than just buying a futures. I'd rather, it gives you an air to be wrong, like a little zone to be wrong for longer. But the downside is, like, last year we sold 415s. I think we bought 470 September calls. Worked perfect. The puts were 19 cents. They paid for the 470 calls. Now, the problem you have is you have a little gap in between, where it was probably right around 440, 435, and 470. So you have a 35-cent gap there. But you also you weren't going to be long all the way until past down 415. So that's what I'm talking about. There's usually a compromise in between just owning futures. Other guys will call and they'll say, hey, I think we're at the lows, or it's low enough for me. I want to start re-owning it. And guys definitely will re-own futures. It just depends on the farm, depends on the guy. And that's the way it goes. But that's what we're going to be working on.
Bank.
Depends on the bank. And some banks don't want you to re-own anything. Others have more flexibility. And again, it's a matter of having a good relationship and, just not overdoing it. If let's say you have 100,000 bushels sold, maybe look to re-own half and meet your banker halfway. Other bankers will insist that once the sale's in the books, it's in the books. And, a true hedger, that's the way it is. I'm kind of I'd say a hybrid, and I think you are too. I want to maximize my hedge. I want to try to make as much money on my hedge and my grains as possible. I know that sounds silly, but, old school hedging would be all sales are final. I think, again, there's a gray area, and I think that there's some flexibility there. But knowing where all these bushels are going, or if you're going to re-own it, I think is this week's assignment class. That's what I think that you should be looking at. Very excited to be working with the FM banks, and we will. If you're in this area, there's going to be a what I would call a marketing club, and we're going to have it once a month. So if you're interested, give me a call. We don't have the day. Tuesday, it kind of looks like Tuesday might be the day, and it's going to be in the mornings. But if you have suggestions for that, let me know. And anybody that's listening that's out of range of that, feel free to call anytime, Ryan or I, and we'll be happy to go over what we're talking about on any podcast.
Absolutely. Well, John, I'm pushed up against time, but let's take 1 or 2 minutes. We didn't mention cattle at all, so
Yeah, let's talk cattle.
Because pretty sure we're still under cash, and cash is not going up. Is that the story here?
Well, recently we caught up with cash in the front contract, August, and this is live cattle.
Okay.
And so cash was $104 higher. So where is cash? I call it 232, and we're there. And then if you look at the feeder cattle, they were way under cash. Now they're very close to cash. And we've had a recovery bounce here. And what the $1 million question is this just the bounce that everybody bought again and it's going to go to new highs? Or is it different this time?
It's always different this time.
I think it's different this time. What you want to watch, this is my opinion, is the box beef. That's where the problems are this year. It's not so much that we have an oversupply of cattle. That isn't happening. It's that demand has gone down. Where box beef goes is where cattle goes. I favor the downside more than the upside, although I think that we could be strong for about a week and a half, 2 weeks. Use that for hedging. That's where I'm at on cattle right now. I do think that we are on the downslope, but by downslope, I don't mean that we're going to crash to nothing. We've had a lot of bad news. The market's absorbed all of it. There's not a lot of cattle around, but demand's a little bit worse on the box beef side of stuff. So we expect lower prices than last year and hedge accordingly. But I don't see anything on the horizon that changes the needle sharp one direction to the other. The border opening would have been one of those things, and it opened, or it's going to open slowly. That will eventually affect cattle, but it seemed like the cattle already had that in the market. So round and round we go. I think these bounces are now bounces to sell on cattle for hedging purposes, meaning when you get your rallies, make sure you're locking in that bottom line. And that's one of the major problems in this, Ryan, is there's no bottom line to lock in when you're buying 350 feeders.
Right.
You can lock in a loss. So the market has a lot of work to do, a lot of meat to move. The demand is not like the last couple of years in the box beef side of stuff. Last year, I think August was just insane for demand. I just don't see a repeat of that. So I'm leaning on hedging on rallies.
Hey, better to hedge on a rally than on what? A drop?
Yep. And right after this, it's time to go back to Twitter and get in Twitter fights and argue about the yield. Because I haven't been following it, but do yourself a favor and don't go online at all to see what people think the yield is. You're going to hear every guess in the entire world out there, and all it does is seemingly make people angry nowadays.
I mean, that's what social media tries to do, I think.
I do. It's unfortunate. It's definitely spilled into the ag sector quite a bit. Yeah, it does. It's designed to get people angry, and people are always angry at any. You'll have your bulls argue their argument here, the bears. Everyone seems to fight this time of year. I'd concentrate more on this is probably slightly worse than the last 2 years or a lot worse, and adjust your strategies that way. That's where I'd concentrate.
Love it. Thanks, John. Oh, leave your number.
218-731-1578.
Thanks, John.
Yep.